Okay, today's video we're going to talk about Google Ads custom variables, how to use them to make more money / profit, okay? In short, what custom variables let you do inside Google Ads is if you have a conversion, through the conversion tracking that you have, okay? You can actually track anything that you want, whereas the default conversion tracking that Google has is somewhat limited on what you can actually track, such as if you wanted to track on a sale that comes through your shopping cart, whether somebody is a new customer or an existing customer, so that information shows up inside your Google Ads platform under the campaign menu, under the keyword menu, and so forth. You can do that with a custom variable, okay? And the significance of doing that, by the way, I'm going to explain as well on this video why you would want to do that and some other scenarios where we used actual custom variables to make more money from our ad campaigns that we were running, okay? So this isn't just about what custom variables are, but how to set them up and why you would want to set them up to actually make more money from your Google Ads campaigns than you already have right now. So you walk away with real usable information by the end of the video, okay? So getting into the content. With only 2 pieces of information, a standard conversion inside Google Ads lets you track, which is something that basically says yes or no. Did this thing happen? Did it not happen? Did the sale happen? Did it not happen? And a value. How much was the sale? $100, $200, $300, whatever it is, okay? Knowing a third, fourth, etc. piece of information can actually be very useful. Like I was saying before, you can actually track the fact that a purchase happened, how much the purchase was, and whether that customer was a new customer or not. Given that new customer can help you make a decision as to what you need to do with your ads in the future based upon having that enhanced or additional piece of information to steer your ads with. And something like that, by the way, a new customer obviously has a lot more value to a business than an existing customer, given an existing customer ultimately, they're both going to spend $100. The question is, am I willing to spend more for a new customer than an existing customer, given that a new customer is going to be harder to get? And if I only am willing to spend $50 for a customer and no more in terms of ad spend, in a lot of situations, what you're going to end up doing is having your ads and the ad algorithm that drives your ads on Google Ads go for the existing customers almost exclusively and go after no new customers less, because the new customer is going to be more expensive to get because they're not going to convert on your site at the same rate. So then what you do is the numbers on the front end of your account look really, really good at surface level. You're building in no actual future growth of your company because customers are only going to be worth so much. If you have no new customers coming in, eventually the old customers are going to start falling off. There's not going to be any more coming to Google to search for anything anymore that have done business with you in the past, and your business is going to slowly die. So if you understood that, you were a smart business owner, and you understood that you got to get new customers, even if they're expensive. Of course, we can't pay an unlimited amount, but we got to be able to get new customers in the door as well, and we're willing to pay $100 for a new customer and $50 for an existing, so we still get new customers in the door as well. Naturally, you want to still get as many of the repeat customers back as possible. You don't want to just go after new customers, because the existing customer purchases that come through Google that you can get are low-hanging fruit. You still got to get new customers. You actually have a more viable strategy. And with that, by the way, you can value what a customer is worth. You simply, a lot of people don't know this, but this is so simple. All you got to do to know what a customer is worth over the lifetime at your company is to divide total revenue at your company you've ever had, total customers at your company that you've ever had. And then you got your average revenue or value per customer at your company. With that piece of information, you can now understand what you can pay for a new customer in terms of marketing or advertising cost. And then now you're set up to get as many new customers through as many different ways as you can, because you know exactly what you need to get, which is a customer at XYZ price or less. I can go and advertise on Google. We'll test everything and find out of everything that's possible that we can spend money on, gets a customer at that price. And then, of course, you can go to other platforms, Bing, Facebook, so on and so forth, and do the same thing there. So that second, third, fourth piece of information that you enhance the conversions that you're already tracking coming in are or have can be very useful to your business itself, or that you may actually have separate goals to track separate things that use as a secondary point of information, right? But by having a custom variable, it allows you to see, okay, they spent this much and they're a new customer, versus this is a new customer versus this wasn't a new customer, and then not necessarily knowing of the new customer how much they spent, if that makes sense. So you could actually, in the scenario where you could track new customers versus existing, you could actually do that with a separate goal, because one goal would then therefore be set up to track purchases. One would be to set up to track new versus existing customers. Custom variables allow you to tie all that information to one conversion overall, so you can see the value of customers that are new versus the value of customers that are old, if that makes sense, okay? And that's what custom variables are mainly for. So with that said, I got some other use cases here where we've used custom variables to make money in the past that you should be able to use to make money for your business, depending on what business type you have here. Starting with business-to-business services, okay? Or business-to-business products. In business-to-business companies where you're selling to other businesses, what's generally very useful in that type of business, okay, is, when you're running Google Ads, is being able to understand how to value that lead or customer that's coming in. If you sell something that's less than $300 on average, you can typically just track purchases. Somebody that turns into a lead and then turns into a customer, you could track whether that person bought or not, because you could track up to 90 days from an ad click whether a purchase eventually happened through offline conversion tracking when that sale does happen, if it does happen, passing that information back to Google Ads and then using that information to steer your ads with. However, if you are selling something more than $300, which $300 isn't a hard fast rule, this is just a general pivot point, if you will, then what happens is the sales cycle window, or that is the average amount of time it takes a customer from the time that they click to the time that they buy, gets to be much larger. Often then those customers that who you're selling to, or prospects who you're trying to sell to, will buy outside of that trackable 90-day window. And in that situation, what would get you the most results is tracking what the predicted value of a lead that you got is, given they're not going to normally buy within that window of time. In that case, what you usually are able to do, right, is have you give them a quote. You don't know if the quote is going to close or not, but you know what the quote size is. And overall, the people that get a big quote are going to end up being more profitable to you than the people that got a little quote. So you could use the quote size as like a substitute for the revenue data that you can't necessarily track, because too many people buy more than 90 days from the time that they initially search for and get to your website through the ads, okay? So in that situation, what I tell clients to do all the time is to score the lead. Score the lead between to use like a 1 through 10 system, 10 being the best quality lead you can get, 1 being the worst. Score the lead. So we'll first of all set up a conversion for each opportunity that comes through, okay? So if a lead comes through and you talk to the lead, like you physically got them on the phone or you physically got chatting with them on email, that's going to be a qualified lead. You're going to have a conversion set up for every one of those qualified leads that you have. Okay, qualified, not, being kind of a misnomer, but we're going to use qualified lead as somebody that we've talked to. Okay, of that, each qualified lead that comes through, that will be triggered by that goal that you set up to track qualified leads. You will score the lead, so you know the overall kind of value of that lead, and you will put that. You can put that in with information about the predicted deal size, going back to what I was saying before about the quote, what you quoted them, or what you're likely to quote them, if that's all you can do. And then a third piece of information would be estimated lifetime value of that lead. Because a lot of times in B2B sales, it's not just about the initial purchase, right? You are likely to maybe get a 10-year contract out of them, whereas what you're quoting them now up front is a 1-year contract. Well, you don't want to just optimize for 1 year, the first year's worth of revenue, because you're not going to have your ads dialed in nearly as well as if you understood what the estimated lifetime value of that customer is going to be and estimate that and give that back to Google as well. So you can ultimately give Google, through that conversion that you set up to track qualified leads, this lead score, which would essentially, by default, what that lead score does is it allows you to estimate what the likelihood of that lead closing is. So if you want, instead of lead score, if you want to say predicted closing rate percentage, it effectively is the same thing. With the predicted deal size, what you quoted them is, versus what is that client or customer likely to be worth over their lifespan. And use those three pieces of information combined to steer your ads with. You may be asking yourself, why not just, then optimize based upon estimated lifetime value versus predicted deal size? And the reality is, in a lot of cases, it's good to have both pieces of information. Because you're not going to be quite sure what is going to be the best way to go up front. Knowing what they're going to be buying that first year in a lot of cases is going to be easier for you to optimize and more accurate to optimize off that information versus the estimated lifetime value. In some cases, you'll find out 6, 12, 18, 24 months into the process of running your ads, estimated lifetime value is better. Okay? So it gives you an estimate, it gives you the option to come back at any time and change your strategy, so to say. Okay? So, and then obviously, estimated lifetime value of a deal is not good in and itself without also knowing the predicted likelihood of closing that deal. $1 million deal with a 10% chance of closing isn't near as good as a $300,000 deal with a 90% chance of closing. So it gives you more depth into using to study what's come through that's worked versus hasn't worked to steer your ads with than if we only had two pieces of information. That is what they initially were asking about and then the deals and the likelihood to close versus that plus what they're likely to be worth over their lifetime plus the likelihood to close. You get what? So that's a very typical situation where we'll use custom variables to make more money from Google Ads, given that at the beginning we'll try to estimate. We'll start by optimizing for what the deal is worth on the proposal or on the quote and this lead score. But over time, we'll use the estimated lifetime value of all the leads coming in to eventually steer the ads with, because whereas the estimated lifetime value is a much more muddy number, when we're talking about hundreds, if not thousands of conversions now, that data becomes a lot more reliable to rely on than 10. Okay, so you need a lot more estimated lifetime value data to make accurate predictions than you would just what is the person quoted on the initial deal. That's the typical scenario that we'll typically go through when we are going to optimize ads. So I wanted to give you that explanation if you're in B2B services where you can actually use custom variables to make more money, okay? If we're talking about, and that was B2B products as well as B2B services. Products being if you sell more expensive products. If you're selling to end consumers, not businesses, okay? Like I talked about before, you could be using custom variables to mark customers that come through that are new versus returning customers. We did this for a women's clothing brand. Given that a new customer is worth a certain amount to our company that we can easily calculate through the revenue, total revenue divided by total ad spend, or total number of customers of the company system that I told you before, and have of the customers coming through, looking at how many new customers we got, and then the new customers that came in, what we're paying for each new customer, and knowing if we're on track or not versus how much we're paying for each existing customer, it gives us the ability to scale the campaigns in a much greater way than what we could if we didn't know if it was a new versus an existing customer. Because if it was, if we're, ultimately, the client said that they would like to pay about $40 per conversion, per transaction or whatnot. But that's very limiting when you're competing against other people that are willing to pay a little bit more per customer. Whereas in this situation, when we could understand it for a new customer, actually we can pay $120. We have tons more ability to scale the ads, being able to spend up to $120, at least for the new customers that come through. So with that, what it allows us to do is not change anything about our ads. We're just going to go ahead and add this extra custom variable to our cart conversion that you have. Start seeing the new customers that are coming through, what the cost per new customer is, what the cost per old customer is. Then if we're at or below the cost per customer metrics we need to be at for both of those, then we can then tell Google we're willing to spend more for a customer overall, and then watch, raise our target CPA or what we're willing to pay for a customer on our campaign by 10%. Watch and make sure our new cost per customer is still in line, as well as our used customer or our old customer cost per customer is in line. And if so, we'll raise the target CPA for the campaign again 10%, given we can, again, only have one target CPA for that the overall sales that come through. But we can now more granularly tell if we're on target. And whether or not, if we spend more money, our top line revenue is going to go up in proportion with our ad spend. Because at the end of the day, after all this, we know we have to be able to only spend 15% of ad spend, or 15% of what our total company revenue is on ad spend. And this gives us the ability to ramp up total sales and still maintain that 15% ratio of ad spend to total sales. Because we can more granularly see what our true investment is on that particular campaign, on a campaign by campaign level. Same thing on a keyword by keyword level. So it just adds more depth to the data that you have, so you understand where it makes sense to spend more money, where you're actually going to get an acceptable amount of revenue increase in your company. Not namely right away, but down the line when those customers come back and they buy again and again and again, you get the full value out of the customer. So with this scenario that I described, you can't scale quickly, but what you can do is you can spend 10% more on your ads, on the campaigns that are driving good new customers that are worth more, wait 6 months, see your revenues come up a good 10% as well, and now you can raise what you're spending on ads another 10% and then keep walking your sales up. For e-commerce companies, that's always our methodology of how we scale an account. It's not about looking at the conversion data in the account. It's where the rubber meets the road the most is what is total sales doing as a ratio of ad spend, what they call marketing efficiency ratio, and trying to get the sales to go up while maintaining that ratio of total sales to total ad spend. And the way that you do that is you identify where you're getting the highest return at any time, and knowing what you're paying for a new versus an existing customer gives you more ability to do that in a more effective way. So you know where to put your chips on when you do that next increase, so to say, if that makes sense. So that's a real scenario where we used the custom variables to make more money. Now, if we're talking about products on the B2C side, or selling to end consumers, didn't mean to highlight, put a box around this, but products or services here again. Another use case is where keywords or audiences are kind of interchangeable. We work with the client who, we had a client that also does brickwork, okay? They sell, like the paver bricks that you put into your driveway, and they sell the bricks. They also install the bricks in your house if you want an installer to come in. So with that, the leads that come in, there's a big difference between the value of a customer on somebody who wants to buy product from us versus who buys the full service from us. Many times though, because the jobs are more expensive, we're not going to know if they close within 90 days. So we can mark at a custom variable to our conversion tracking that we have on each conversion, whether that be or on the phone call conversions, on the form conversions. And of the phone call and form conversions, we can see, because there's an additional custom variable, whether this was a service-based customer or a product-based customer. Given a service-based customer is worth a lot more than a product-based customer. So similar to what we were talking about with the clothing company, we can identify whether a certain campaign's driving ROI from us because we can see more granularly of the leads that we're willing to get and pay for. Are the leads we're getting likely to turn into bigger jobs versus smaller jobs? And the leads that are producing, or the campaigns that's producing more so the service leads that are worth more, we can actually tell Google we're willing to pay a little bit more for leads in this campaign that mainly produces service leads versus product leads, if that makes sense. So that was a scenario where in the past that we were able to use a custom variable to be able to make more money as well. We have, it also in the past before epoxy flooring in that space. So I had a client who does epoxy flooring services where, put epoxy on the floor. With that, there's a lot of people who search for epoxy flooring who want product versus service, okay? This client doesn't do product, so to say. So naturally with that, what we could do is we could score the lead and do all that, or we could add just a simple custom variable in there that says this customer wanted product versus service here, and understand then with all the keywords that we have, which keywords, given a lot of keywords are arbitrary, where they're typing in like epoxy flooring, are worth going after or not, that produce mainly product leads versus service leads. And then you just start collecting all the data and see, okay, 80% of the time if somebody types in epoxy flooring, they want services versus products. This one's still good, whereas you can't really tell until you've done some testing on it. Whereas somebody typing in floor epoxy, 80% of the time they want product, not service, if you will. And you would think a lot of people, when they get to your landing page, they would read your landing page, by the way, and know that even though you don't say you sell product, that this is a service, they would self-select themselves. Many people don't read. So in a situation like that, you don't want to waste your salespeople's time. You don't want to waste your ad spend on leads that you can't sell. You can actually start figuring out, if you collect the data that is, about which people are product versus service customers, so you can weed out the ones that you don't want from keywords that generally net one or the other, so to say. And then you can just shut those keywords off, and then you're not paying for them anymore. And so you're basically like running a study, if you will, on your market as to the types of people that want product versus service. Because believe it or not, even though if you're a local company, you do epoxy flooring, somebody types in floor epoxy, they will think that they can hire a company to just bring them out floor epoxy, like with the paver company, even though companies don't do that. They offer the service as a package with the product or nothing, but they think they can get it. So if you go to a page that says Orlando floor epoxy services, they'll still try to fill out the form trying to get the product by itself brought out to them. And if you don't want those, naturally, then you got to be able to weed them out somehow. And the custom variable is just a great way to weed them out itself. Of the leads you have, you can see, okay, this one wasn't the right category of lead, this one was. And of course, a workaround way to do this would be to score the lead. You could add, with the lead, because going back to what I said before, you can add a value to every conversion goal anyway, and you could have scored that lead between 1 and 10. That's between 1 and 10. And you could have something set up to where if it was a product lead, you could have it be a 6, and if it was a service lead, it could be a 4, but it's not very clean. Whereas the custom variables, you can have it named anything you want. So naturally, inside your campaign and keyword menu, where if you split rows, you'll be able to actually see it say service versus product. So it's very clear, and also set up so it's binary, if you will, as well. But that's how you use the data, by the way, when you're said and done with this. Once you get the custom variable set up, you split rows on the whatever menu you're on, whether that be the campaign menu, keyword menu, time of the day menu, day of the week menu, or dimension, or in the reporting, if you're going to create a custom report. You can do this on the device menu and just basically see where the product versus the service leads come in, because you'll find other trends. Okay, well, of all the shitty product leads that came in, if you're going back to, if you're that epoxy floor paint service company, they're all coming in on the weekends. Well, let's just stop advertising on the weekends. Maybe that's the way to go. Realistically, in that company, in a situation like that, it's certain keywords that are going to drive all the wrong type of leads. But sometimes it's like 50-50. And so you don't want to shut off the certain keyword because to get rid of the 50% of the bad leads, because you'll lose the other 50% of good leads. So when you add a secondary filter to what you're doing, that is, you also find out 80% of the product leads that you don't want come in on the weekends, and you shut off weekends. Now that 50-50 spread that you get from a certain keyword, good, product versus service leads, now it's 80% service leads and 20% product leads. And so you took a keyword that wouldn't have been variable without that additional weekend versus non-weekend filter added to the process, so to say, if you follow my logic and how all this basically works. So naturally, because you can see on all these different levels where the good versus the bad leads are coming in, it's just literally a process of elimination. Going through, getting enough data so you can see on time of the day, day of the week, keyword level, device level, parent level, income level, part of the city that they're in, part of the state that they're in. And you actually, goes into an unlimited amount. You can actually go ahead and, using the audience menu, see if somebody likes fast food or not. If somebody likes fast food, and 80% of the time of the person likes fast food, they want a product versus a service, you can get rid of every single person from now on that likes fast food by adding a negative 90% bid adjustment on the person who comes through that likes fast food, which most of you guys won't go to that level with it, but it's possible to do. So, but with that said, that explains custom variables, why and how you would want to use them. If you have any questions, leave me a comment below. I get back to every single person who leaves me a comment or a question on this channel, usually within a couple days' time. With that said, you can ask me any ad-related question that you would like, by the way, in the comment section. I'll use my 15 years of ad experience and my 40 hours a week of ad strategy that I do and use for the dozens of ad accounts I work on to try to give you the best advice on what works and what doesn't work and get you on the track of what you're trying to do again. So with that, you can, even if you don't have a question about custom variables, or you have just a general ad-related question, you can easily ask me. I love being able to answer people's questions on this channel, just as a way of saying thank you for watching the channel and helping the channel grow. If you are going to pay attention to any information on YouTube or on the web about how to make money with ads, this is the channel to subscribe to, by the way, as it is coming straight from the source from somebody who just does ad strategy 40 hours a week, literally speaking. It sounds like other people that have channels do that, but I promise you they don't. These people selling these courses and whatnot, they are not doing ad strategy 40 hours a week. They don't run an ad agency. They sell courses. Or if they run an ad agency, they don't actually work on the client's stuff. Or they manage one or two accounts. They don't really understand anything because you got to run dozens of accounts to really see what works on a broad scale basis. And so for all those reasons, If you're serious about making money with ads, and I mean millions of dollars a year in running ads for your business, this is the channel you want to subscribe to because you're getting information straight from the source, and you want to subscribe now because there is no better information to stumble upon regarding it. It comes from somebody who just does ad strategy all day long and just has a YouTube channel on the side to share that information thereof. So, not a full-time YouTuber, not trying to make money from advertising revenue. This is about promoting our advertising firm, to be fair and frank, but even with that, we do not charge clients fees until we get the results up front. So I should tell you about the quality of the data that you're getting here on this channel. I also, by the way, have a blog at guaranteedppc.com/blog where you can also find advice from myself, specific strategies that make money that you can follow step by step with screenshots, with all that. If you like my channel, you'll love my blog even more. Most people typically do. If you want somebody to help you just execute on the stuff I talk about on this channel, this is exactly what I do for clients at my firm. And like I mentioned just a second ago, we do not charge our clients fees until we can get them results on their accounts. Nobody else does anything like this in our advertising space. That is guaranteed results. And what we ultimately do is we offer to raise your sales on the same amount of ad spend, basically speaking, with what you got. And the results there will either pay for the cost of our service or it don't. And if it don't, we don't even offer to work with you. And if it does, we'll take you up to that higher mark with your sales that you'll be making more than what our fee is, or we don't charge any fee at all. There's no catch or anything other than the fact that we got to know we can get great results with your campaigns before we start. And there's only one way to find out if we can, that is to reach out to me at my firm at guaranteedppc.com and have me look at your stuff, which I'd be happy to look at your stuff and get you an estimate of how much results we could get with your stuff if we were to work together. If you don't want to work with an ad agency and want to get results right away, there is one other way to do it. That is, if we've worked in your niche market in the last 10 years of running the firm, we've worked with hundreds and hundreds of different companies. If we worked in your niche market, you can use the exact ads, landing pages, campaign templates, everything that worked for your market, and copy and paste all the results we were getting in your market into your account and get the same results we were getting. That bypasses all the work, all the money, all the time that it took to figure out how to get those gold-plated results that we have, that we took years many times to figure out how to get right and get them right away. So there's no scenario where doing it all yourself is going to make more sense, because we're not selling these templates for that much money. With that said, if you want to see if we worked in your market, reach out to me at my firm. I'll let you know what results we got in your market if we worked in your market before, and how you'd be able to get those templates from us. We got people using these templates to just start other businesses. If you want an almost guaranteed way to be successful in business, use a template to sell a product or service that a client sold. Granted, they're in country A, you're in country B. You got turnkey results with it. It's all you got to do is just find a way to supply the same thing. The ad template sells that thing perfectly. And we know that before you ever use the template. So, and we got people that also do lead generation businesses where they'll take our templates that generate leads at a rock bottom cost, and they'll sell those leads to other people in the space, which is a great passive income business idea, by the way. But anyway, if you're interested in that, you can also reach out to me at my firm. I mention it on every video now since I did start mentioning it. Lots of people are interested in these templates, which it's the best thing since sliced bread if you're trying to make money with ads, if you can actually get your hands on a template that already works. But I'll wrap everything up with that. Hopefully you enjoyed this video, and I hope to see you on my next video where we have another great strategy for you then. See you later.